So Turtle Beach Corporation recently released their third quarter of 2021 earnings, so I wanted to go over some of the results there and some of the things the company's going through, seeing as though it is one of my largest stock holdings, so I'm trying to pay attention to what's going on with the company, at least every now and then, just to kind of get a gauge on what direction the company's heading, see if the thesis that I have for the investment is playing out, and if it isn't, potentially making adjustments to my thesis. So I just wanted to go over some of the highlights here. Now, for those of you who don't know, Turtle Beach, ticker symbol HEAR, is a gaming headset and gaming accessory company that's listed on the NASDAQ. They've been hovering around a $450 million market cap over the past few months. Most of this will be coming off of a press release, so keep in mind, take this with a grain of salt, since press releases from companies often are going to be quite a bit rosier than they might otherwise be in actuality if you're looking at just the data, but it kind of helps to understand the sort of business focus and strategy that they're going for. So I do like to pay attention to these just to see what direction the company is going. But anyways, the press release reads, "Our excellent third quarter results were the second highest third quarter in our history, only outdone by our extraordinary 140% year-over-year growth in Q3 of last year, that's 2020, and we're pleased to see our year-to-date revenues up 13% as we remain on track to grow from our record year in 2020. So that's definitely good to see that 2020 may not have been a complete fluke year for Turtle Beach. It was a fantastic year, 2020. They had massive sales, especially into the latter half of the year. Part of that was driven by the stay-at-home sort of environment we found ourselves in. And lots of people are buying console headsets, which is Turtle Beach's main product. That's kind of the backbone of their business, is console headsets for things like the Xbox, PlayStation, that sort of stuff. That's kind of their main business, but they're starting to diversify into other outlets, which they talk about in this release. But anyways, 2020 was a huge year because of those things, the environment that we found ourselves in, but also those console sort of tailwinds that Turtle Beach had. Some of those same things have definitely carried into 2021, don't get me wrong, but it's good to see that they're maintaining at least some of this momentum and are maintaining a lot of their revenue numbers compared to the previous year. And my personal investment thesis for Turtle Beach, and one of the main reasons I remain invested in it, is because I think they're going to continue to steer away from console headsets. Well, not really steering away from, but adding new businesses outside of just console headsets. And that would ideally get rid of some of the cyclicality of this type of business, but also allow them to actually grow beyond just the limited console headset market. There's only so much market share that they can take, and they already have a massive share of that market. So I want to see them making progress in actually diversifying the revenue streams, but not to the point of creating completely wildly different businesses where you're not going to get any benefits of synergies and all that sort of stuff. And to that, Turtle Beach says, console headsets continue to perform well despite the worsening impact of industry-wide component availability, shipping delays, and freight cost increases. Still, our non-console headset categories in PC, microphones, game controllers, and flight simulation continue to track with our expectations and are offsetting some of the console headset revenue constraints. Our rapid portfolio expansion into new gaming categories has diversified our business and continues to drive growth. In fact, product line expansions beyond console headsets provided third quarter revenues approaching 20% of the business. So that's something I personally was pleased to see, that they are continuing to move towards more products outside of just console headsets. I think that will bode well for Turtle Beach in the long run. Of course, you can make your own conclusion on whether you think this is a good idea. One thing that was definitely concerning though with these results is the fact that gross margin in the third quarter of 2021 was 34.3% versus 41% in the third quarter of 2020. Again, the third quarter of 2020 last year was a very, very, very strong quarter for them historically speaking. So you'd expect maybe a little bit of margin shrinking, but this is concerning because they do point out that the decrease is primarily due to changed business mix and increased logistics and freight costs. The company continues to expect ongoing headwinds from higher logistic costs, shipping delays, and challenges with component availability. In general, things are getting more expensive and harder to ship, and that is not going to bode well for pretty much any business. And we'll see how many of those costs that Turtle Beach can successfully pass on to customers, but that's never really a good thing when you have to do that. We'll see if this margin continues to shrink over the long run. You would expect at least some compression as the company continues to grow and grow. Typically, it's very hard for a massive company to maintain huge margins, often because lots of competition will come in to try and knock down those margins. And I would expect to see that in something like the video game space, where there is quite a bit of demand and you'd you'd expect competitors to come in to try and soak up some of that demand, which would decrease margins. But for now, their margins are quite healthy. Just want to keep an eye on those and see how they actually move those profits into different ventures to try and compound them that way. Now, they did spend quite a bit of their income in this last quarter towards building up inventories. It looks like they do this pretty much every time in the third quarter, preparing for the holiday season, I'd imagine. But they also say that the company intentionally manages higher levels of inventory to prioritize product availability amidst global supply chain and logistical challenges. So it appears there's an extra incentive to stock up now while you can actually get the product rather than risking not being able to get it because of all the supply chain issues we've seen throughout many different industries throughout the world. And Turtle Beach does have a very clean balance sheet. It's not like they have a bunch of debts to worry about, so they can afford to stock up some inventories now using the cash they have and the income that they're bringing in. But I think one of the most surprising things from this earnings update was the fact that Turtle Beach actually bought back shares after issuing shares pretty recently. It says during the third quarter of 2021, the company repurchased approximately 169,000 shares for $4.9 million at an average purchase price of about $29. $28.87 was the average share price. Turtle Beach has been a net issuer of stock over the past few years, which typically is not a good thing for investors because it means you're being diluted, but sometimes it makes sense for things like mergers, and they've been doing acquisitions over the past couple of years as well, so I'm sure some of that is tied to that. But generally, all else equal, you wouldn't want a company to dilute you and start flooding the market with new shares, and thus you have a smaller cut of all those earnings. But at the same time, you wouldn't want the company to overpay for itself and just frivolously do buybacks to buy back the shares and do the opposite effect, where you have now a larger cut of the business because there are less shares out there. But the fact that Turtle Beach is starting to buy back its own shares does suggest that they think they're fundamentally undervalued, or at least enough to where they're going to put some of their cash towards buying back shares and increasing share values that way. But they have had a really great return on invested capital over the past few years, so I'd probably rather have them invest that into new ventures and compound the capital that way rather than just throwing it back into share buybacks because they don't know what else to do. But hey, as a shareholder myself, I will take share buybacks over share issuance. But that's the update for Turtle Beach. They had another nice quarter, and it'll be really telling to see how much of the momentum from 2020 has really carried into 2021 once we head into the holiday season for Q4 of 2021. If Turtle Beach can come close to what they did last year in Q4 of 2020, that will be really huge for the company and will suggest that they've really built a solid foundation that they could continue to grow from rather than just having some fluke year in 2020 and 2021 was going to be way less all along. Whatever the case, I'll be keeping an eye on it and keeping you guys updated. Anyways, if you guys like this video, please like it since that would help the channel out a lot. And if you want to see more content about investing, stocks, real estate, and pretty much everything as it has to do with personal finance, then be sure to subscribe since I put out new videos every single week. And check out some of the free stuff in the affiliate links in the description below. But until next time, take care.